Bitcoin weakness continues this week with the price slipping towards 100K, a level it hasn't tested in nearly 5 months. Long-term holders have unloaded more than 400,000 Bitcoin just in the last 30 days, one of the largest distribution waves in history. So what's really going on here? Is Bitcoin quietly entering a bear market? Or is this the final shakeout before something much bigger? Why are OG holders selling into strength while global liquidity expands? And could this be what Jordi Visser calls Bitcoin's IPO moment, the rotation from early believers to global capital? Today, we're going to unpack the real dynamics behind this sell-off, why the charts are sending mixed signals, and how this year-long consolidation around 100K might be telling a very different story than most people think. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm Hurley, now let's get into it. Since the lackluster run at all-time highs in early October, Bitcoin has been leaking to lower highs and lower lows, now threatening to drop below the psychological $100,000 level for the first time since June. Last month finished as the third worst October in Bitcoin's history, shattering the Uptober narrative we've become accustomed to. Now, market dynamics tell us when the Bitcoin price dips like this, there are more sellers than buyers. And it's becoming more apparent that the heavy long-term holder selling pressure that we've seen throughout most of 2025 has only continued into the fall. Over the last 30 days alone, long-term holders have sold more than 400,000 Bitcoin, or nearly 2% of the total supply. This is a continuation of one of the largest distribution events we've ever seen. And yet Bitcoin is still holding above $100,000, at least for now. We're down about 20% from all-time highs, but that's still a relatively shallow dip when compared to the major corrections we've seen in the last 2 years. So what's actually happening here? Every on-chain signal points to an enormous transfer of ownership. Coins that haven't moved in many years, in some cases over a decade, are suddenly active. Make no mistake, this is the largest long-term holder distribution in Bitcoin's history. And the price has stood up remarkably well throughout the onslaught of selling all year long. So although the price action seems weak and disappointing, beneath the surface this may not be a sign of weakness. But many investors and traders are getting disillusioned, as Bitcoin continues to go down while there is so much strength in other markets like tech stocks and precious metals. But I just want to point out that we heard this exact same grumbling in the summer of 2020. Back then, gold was breaking $2,000, stocks were at record highs, and Bitcoin was stuck range-bound between $9,000 and $12,000. People thought it had lost momentum, that the magic was gone. Then it broke out to 20K, 40K, and 60K in the months that followed. I say this to point out that fear and doubt often comes right before the breakout, and this feels eerily similar to late 2020. That brings us to a powerful new lens from Jordi Visser, a veteran macro investor who spent decades inside traditional markets. In his words, what we're witnessing right now isn't a breakdown, it's Bitcoin's IPO moment. Early investors aren't panic selling, they're methodically distributing their positions. They're doing exactly what founders and venture funds do when a company matures as it goes public. For over a decade, OG holders couldn't sell in size without wrecking the market. There wasn't enough liquidity, and now there is, through ETFs, corporate treasuries, sovereign entities, and deep institutional demand. Visser calls this a silent IPO, a liquidity event where early adopters finally cash out and new long-term holders step in. Before we go deeper, here's Jordi explaining this in his own words, from a recent conversation on the Palm podcast.
Beginning in May and in early July, there were a lot of I want to say rumors flying around, but they weren't just rumors. And this is not speculation. Anyone can go look this up. But there were stories about China cracking down again on Bitcoin miners and on crypto ownership and blah blah. And it got poo-pooed and everything went on. Since those stories came out, there's been an overhead of supply that have gone through. And I just want to make sure people realize there's two themes as a traditional finance person that has spent a lot of time trying to take the lens that I learned everything through, which was as a trader, as a macro person. So I think the reason I shake my head at Bitcoin is because every possible thing to everyone listening that you would want for Bitcoin is happening right now, meaning the government is supporting things. The financial guardrails are shifting. We've got news after news every single day about the financial guardrails becoming more digital economy. It's things that are necessary for the network effects to kick in. All of that has happened. We still see inflows from retail. We still see the banks now opening it up for people to go through. But there's clearly a bunch of whatever it is, OGs, Bitcoin miners out of China, whoever it is, large amounts. Mike Novogratz publicly said it. If you go back to July, there have been billions and billions of dollars of, let's say, original investors supporting Bitcoin, regardless of how you want to term it. So I'm writing a Substack. I think what people should think about is we don't have an IPO for Bitcoin, but this last 4 months to me feels like sourcing the pricing of the IPO, where the original investors are getting out of large chunks. Now, why is there ever an IPO? For monetization. If someone has 9 billion in Bitcoin, I mean, I think they should diversify a little bit. If it was related to China, guess what China has now that they haven't had since 2014, 15? A bull market in stocks. Guess what else people have? Well, they have the chance to invest in AI. AI is a 10-bagger in many cases. You've been able to do it in the public markets. So I think at some point, Bitcoin becomes a boring asset to people who are looking for 3-baggers, 4-baggers, 5-baggers. It becomes a diversification. So I think this is just a distribution of a few massive holders. And the weaknesses I have heard about Bitcoin as I've gotten into it from institutions, it's too volatile. Not too volatile anymore. We've taken the implied volatility and the actual realized volatility down to 30 and below in some cases. So the vols come down. Okay, what's the next thing? Well, it's too concentrated in ownership. I mean, I've gone through the numbers. When you add Satoshi's wallet, you add the other whales, you're talking about a third of it has been owned by not many people. I think like 10,000 is the number I heard. Regardless of what the right answer is, every month the Bitcoin IBIT outstanding shares goes up. It's up again this month, even though the price is down. So I think everyone that's depressed has actually become entitled. I think they think it's a risk asset. Oh, there's another one. This is just a risk asset. Okay, well, it's not going up with the NASDAQ, so that's good. Lower correlation. Well, it's just digital gold. Well, it's not going up with gold. So guess what? In portfolio theory, for everyone who hasn't bought any yet, I think with your stocks, with your gold, with your bonds, now there's every argument to make. It's lower volatility now, lower correlation with the other traditional asset class, diversification from gold. I think this thing is going to move higher. I was wrong about where I thought we'd be at this point. It's still up for the year. I think once this consolidation is done and we're through the IPO process and the fundamentals take over, next year, once we get through clarity and the beginning of tokenization and the stories of Zelle and everything along those lines, I think we're going to have an acceleration in it.
So maybe the bubble isn't bursting after all. Perhaps it's just ownership changing hands. From OG whales who've been in since $100 or less, to ETF buyers, institutions, and corporate treasuries who plan to hold for decades. After being treated like criminals and outsiders for years, early Bitcoin investors are finally able to use TradFi rails to move big funds and diversify their life-changing Bitcoin fortune. As Jordi pointed out, for the better part of Bitcoin's history, a huge chunk of the available supply was being held by a small minority of around 10,000 whales. And that's now changing. Just like Amazon, Apple, and Google after their IPOs, the distribution phase looks boring, frustrating, even bearish. Right before a massive expansion. It's the end of concentration and the beginning of distribution. And that's how assets mature. Bitcoin isn't moving with gold or tech stocks, it's finally moving on its own terms. That's what a maturing monetary network looks like. Another way to make sense of this is to zoom out and look at the structure of the market itself, not just the price. If you pull out the weekly chart, you'll notice the tightest Bollinger Band squeeze going back to mid-2023. For anyone not familiar, Bollinger Bands are just a simple measure of volatility. They widen when price swings get large, and they contract when things go quiet. Right now, they've almost collapsed in on each other. This tells us volatility has drained out of the system. Markets don't stay that calm forever, and when they've hit this level of compression in the past, it's usually preceded by a decisive move one way or the other. In prior cycles, those squeezes often came with a brief dip lower, a final washout, before volatility returned in the opposite direction. Whether that plays out again here remains to be seen, but it does suggest we're nearing the end of this unusually stable range. The next thing worth noting is the liquidation heat map. It shows where leveraged short positions, traders betting against Bitcoin, have built up across price levels. Right now, there's a cluster of shorts stacked between roughly 115K and 125K. If price was to start climbing back into that range, those positions would begin to unwind. Each one forced to buy back Bitcoin to close, which can add significant buying pressure in a short period of time. Now, this doesn't guarantee a reversal, but it helps explain why even small recoveries in tightly wound markets can move faster than expected. And finally, there's the global liquidity backdrop. If you chart Bitcoin alongside global M2, a broad measure of money supply, you can see a correlation that's held for most of Bitcoin's life. When liquidity expands globally, Bitcoin tends to benefit. But that relationship has weakened over the past year. Liquidity has been increasing again as central banks ease and capital rotates into risk assets. Yet Bitcoin has been stagnant or drifting lower. That divergence has some worried that Bitcoin has lost its macro signal. But it could also mean that the current selling pressure from long-term holders, early miners, and whales is temporarily masking those underlying liquidity tailwinds. If that's the case, Bitcoin may simply be lagging the same global flows that once propelled it higher. So when you line up all three of these factors, you get a picture of a market in transition, not collapse. It's quiet, it's heavy, and it's waiting for a resolution. And as always with Bitcoin, that resolution tends to come when the fewest people are expecting it and when fear and panic set in. Now let's be real. There's always more going on behind the curtain. From whispers about political interference and exchange settlements to the bizarre pardon saga around Binance founder CZ, there's no shortage of theories about price suppression. But as the saying goes, you can only hold a beach ball underwater for so long. The larger Bitcoin's market cap becomes, the harder it is to manipulate. Volatility is already collapsing, and once the selling is finally absorbed, upside moves become violent. Now we've called this the Great Rotation all year. Jordi Visser just gave that rotation its perfect name, Bitcoin's IPO moment. 2025 might be the year this market stopped being early adopter money and becomes global capital money. This is most definitely not the end of Bitcoin's story. It's the end of its adolescent phase, the moment it graduates from an idea into a monetary force. And you can see that maturation everywhere, even in the real world. Swan Bitcoin just went live in New York, the world's financial capital. For the first time, New Yorkers can buy, custody, and withdraw real Bitcoin through a fully regulated platform built for long-term holders. No paper promises, no distractions, just Bitcoin. It's another sign that the network is growing up, and the institutions are finally here. Visit swan.com or download our app by searching for Swan Bitcoin in the App Store and get started stacking generational wealth today. Every transformative asset goes through this. The internet did, gold did, tech did, and now it's Bitcoin's turn. The sellers are trimming their positions because they've already won. The buyers stepping in now, they're positioning for the next decade. So stay humble, keep stacking the dip, and be patient. Because boring and fearful markets build the strongest foundations. What do you think of Visser's framing that this is Bitcoin's IPO moment? And do you think we need to dip below 100,000 before the next move higher? Let me know in the comments below. And if you found this breakdown helpful, hit the like button and share it with a fearful friend. And don't forget to subscribe to the Swan Bitcoin channel to help more people cut through the noise. Thanks for watching, and remember, there is no second best money.